We'll get everything started. Nice. Open the doors. See how we do. Open the door. Everybody should just see this. There we go. We got people loading in. Good. All right, guys. Gonna have some fun today. Been doing a lot of these classes. Tony and I were talking about the fact that while I'm talking for a little bit of time, but we're gonna have some fun. So I will try not to drop any of these while we're talking. So since it's being recorded, so but got everybody loading up in here. It's a little early, so we will eventually do a share screen with the form that you guys should have. Any communication that you guys want to do with us, hit us up in the chat box. Tony's going to put a little intro in there just to kind of find the chat box, hit us up there. You're really only you guys won't be seen, but you could certainly be heard. And keep in mind, this is about you. If anybody doesn't have their budget form, hit us up in the chat box and we'll make sure that we get you one as we're going. Tony's kind of going to be in the background. She's my minion, so she's going to be taking care of stuff in the background and helping me out as she always does. She does a great job. So cool. We got some people coming in, so we're going to have some fun today. Got a couple prizes for you guys. And I think the biggest, really the biggest prize to the whole thing is going to be the fact that at the end of the day, you're going to have a little bit better idea of how your own personal finances work, a form that you can actually share with your significant other if you're in a two-person household, and something that you're going to be able to track how you're doing month in, month out, and really most importantly, some savings, because this is going to kind of lead to some future classes that we have. So as we cross over into 9 o'clock, this is one of our Kimball Financial Wealth series where we really want to give back to our clients, and we want to make sure that they're in a better financial situation because they're working with us. It's really important to me. You know, we kind of kid around like, hey, we're going to put you in a lot of debt when we make a mortgage to you. Let me help you get out of that debt. So that's how that's going to go. Okay, looks like Maureen's asking for a form. So Tony will take care of that. She sees that. She'll get you guys out the budget form. And we're going to I'm going to kind of walk through how you fill it out. Probably the best thing that you can do is just take some notes on how to fill it out. Maybe even take some notes or write some notes if you printed out the form and you want to take some notes there. But I'm going to give you a second and grab a pen and a piece of paper. You may want to take some notes on the form. And Tony did post the personal budget form in the chat. I wish I was technologically advanced to tell you should be able to access that through the chat. I'm assuming you can. But again, that's why we keep the minions around. So, all right, we are at 9:01. I am, let's see, thanks. I couldn't find what you sent before. Cool, you got it, Bobby, we've got you hooked up. And now we're gonna go share screen so we can get into the budget. And there's my share screen. And the budget is in lots of screens. Bink, here we go. All right, you guys should all see that. I just have to open up the chat box and put it on the side so I can see the chat box as you guys are communicating. Please remember to communicate in there. I'm gonna move one thing around and then we'll get rolling. So get to broaden that up. All right, cool. All right, so this form essentially is something that you guys can use to track not only what you have coming in, what you're spending, but ultimately savings. And that's really the goal here, is to, no matter where you're at, whether you've got a lot of money, whether you got a lot of credit card debt, whether you're just starting out, whether you're just savings, no matter where you're at in the financial world, this form will help you improve your current financial situation. So what we're going to do is, I've got a form that I actually filled out here I'm going to just take some information and transfer it over and show you guys how to use the form. This is a form, by the way. I know I put this in here for January of 2022. This is a form really you're going to fill out after the end of the month. So after you have your bank statement that shows you everything you wrote checks for last month, shows you all the deposits you have, you're going to take that and put this into the form. And then I'm going to show you what this form can do for you. And then this form is rolling, which means as we put in savings, it'll add that up. And then next month when you deposit to savings, it'll show that. So with that, let's get started. Okay. Perfect. There was a question about accessing a recorded copy later. We will get the participants here that stay. I don't want you guys running away, but the guys that stay and girls that stay, we'll get you a recorded copy. But let's get started. So what we're going to start with is column 5, which is paychecks. So paychecks. So I put down here, simple round number, that we had payroll deposits of about 3,800. Now, I also want to make sure that I cover any other thing that you might get. So let's say, for example, we've got a gift from grandma for, let's say grandma gave us a gift of $100. And so that would be in here. Sorry about my tab. Let's see if I can fix that real quick. There we go. So so grandma gives us a gift. So grandma gift, and again, it's kind of a one-time thing, but we're going to put that in here. And any other deposits that you're going to have, I'm going to put in here one other deposit, because everything you make should go on here. And I'm going to put in here side job, side job cash. And we're going to put that in here at about 539. So that's a good place to put places like, I don't know, you're doing some side work. Maybe a lot of people do things gig. Maybe they're doing a little Ubering on the weekend. Maybe they're doing Uber Eats. Maybe they're like my godson who's buying and selling sneakers on the internet, making a lot of money. Whatever that is, that's going to go here. So in column 5, we know we have a number that is, we have a number that's 4439. That's our total paychecks or our total deposits for the month. So that's our net income, by the way. This is really important. This is what goes into the checking account, not the gross income, because you can't pay bills on the gross, you pay bills on the net. So, all right, the next column that we want to talk about is column number 2. Now, this column really focuses on the minimum amount due, not what you paid, but the minimum amount due. And we're going to show you why that's important, because at the bottom of this, we're going to get to a minimum survival number. And that's going to be real important when we start talking about savings. So in this is an example of somebody who maybe has a small condo. So what I want to do is I want to start out with their mortgage payment, which is principal, interest, taxes, and insurance. So I put this in here at $1,154. That's everything, mortgage payment. But I did mention it was a condo. I actually already had condo dues in here. So there are condominium association dues. That's about $150. So one other thing that you should do, and this is a great tracking piece, is under the house, what I would like to see you do is put the balance of the mortgage that you have. So in this situation, any bills that you have that carry a balance, I'd love to see the balance here on the left-hand side. Couple things you can kind of, it makes this form a really quick reference for your whole financial picture. So, I mean, that's fantastic. And it also will help us when we start determining the equity that you have in the property, that type of thing. So we've got this particular person has a car payment. It's $299 a month. We're going to, again, same thing. We're going to put the actual amount of the car balance. That's $78.55. So we've got that. We don't have any student loans, fortunately, but we do have credit cards, and we have a credit card balance of $442. And our minimum payment on that is $40. Now, what I also want you to see is that we're only showing minimum payments. However, if you're one of those folks that pays the credit card off every month, we're going to show that you paid $442 in the amount that paid. Minimum due, but the amount you paid. Same thing, we've got the association dues, that's paid. Now, car payment, we paid that. Now, what if you actually kind of round up your mortgage a little bit? So an overpayment in something that has equity like a house, let's say we paid $1,200, you actually knocked off an additional $46 on your principal. That's money that goes towards your equity. We consider that as amount saved for the month. So, and again, guys, stop me anywhere. Oh, good. We've got a question that came up. Is there an electronic version of this? So this is as good as it gets. Ultimately, it's an Excel spreadsheet that you can, it's an Excel spreadsheet. So I'm not exactly sure what you were looking for, Bobby, but this is the version. Hopefully you could print this if you wanted to do it by hand, or you could certainly use this version here, which is just an Excel spreadsheet. Okay, so sticking with the column that is here for the minimum amount owed, we don't have to put anything there, but we're going to just start adding up some bills. And you're going to go into your checking account, see what did you pay for electric? What did you pay for gas? What did you pay for your cell phone? What did you pay for cable? Bear with me. 29. So 129, 55. And these are the amounts we paid because we don't overpay regular bills. So 44. And let's see here, we're skipping, oops, I put cable in the wrong spot. Sorry about that, guys. So that's there. This is here, here. All right, so we're going down the line. We do have a water bill at $33. So that came in, water for that. We don't have yard maintenance because again, we don't have, we're in a condo. I did put in here a note for insurance. This is what we're paying for insurance. That's most likely car insurance, maybe on a monthly basis. And then of course we've got internet. And again, I just want you guys to take this information from what you paid out in your checking account. Assuming that you're paying all your bills in your checking account, you'll be able to see all the different things, all the different amounts that went out. Gas, wintertime, big gas bills, so we're going to put that in there. Groceries, we'll put at 500. And now we're going to add some columns. Now, this is your form. Do what you want with it. If you've got other expenses that are not on my base form I gave you, type it in here. So we're going to type in here, dining out. And let's say dining out for this person was about $425 for that month. We're also going to put doctor bills. So if you've got doctor bills, prescription, things like that, medical expenses, we're going to add that there too. So again, this is just a sum of the minimum of what it cost you that month. Okay, we've got that. Oh, and I'm going to pay, let's say, just spending money, some stuff you didn't really keep track of. Say you gave yourself a little bit of an allowance and it's like $200 in cash and you didn't really keep track of it, but you gave yourself $200. I'd prefer you keep track of everything, but not a perfect world. This isn't about being perfect. This is just about tracking that stuff. So you did spend $200 on miscellaneous. So we get down to the bottom, we got a couple numbers that have already auto filled in. Our minimum survival number for the month is 3651. Why that's important is because down here, ideally, and hopefully you guys can all see it, I'll put it in the center of the screen. Ideally, you want to have at least 3 months of whatever your minimum survival number is somewhere liquid that you can get to it. We're going to talk about how to get there in a second, but this thing automatically calculates whatever your survival number is. Now it's going to change from month to month, but for the most part, there's some variances up here. Is your dining going to be different next month? Is your groceries going to be different next month? Do you have a little vacation that you're going to take? So this number is going to vary. It's going to go up or down. The form will automatically calculate what 3 months is that you should have in there. I picked 3 months because honestly, in most professions, if for God forbid you lost your job, especially in the labor market we have today, you should be able to get a job pretty quickly. However, If you're in some sort of unique field that it takes longer to get a job, you may want to put a larger number of months on this. So if, let's say, you're a higher paying executive or something of that nature, and it takes you longer, there's a longer lead in time to get hired, maybe you make that number 6 months, not, or if you're on commission and you have wild swings in your commission, you might want to have a little bit more. I think everybody should have about 3 months. So now we've automatically calculated our survival number. So that's kind of cool. Any questions about that? Any questions about that and how to build this first part out? So we've taken care of the income. We've taken care of what the minimum is. We've already showed you guys what your 3-month survival is. And what do we got here? It doesn't matter if we pay cash or use credit, if credit. Oh, okay. So here's a great question. And Bobby, you've been really interactive and had a great question. So we are going to send a gift. We are sending you for asking questions and being interactive. And we really appreciate that. You are getting a free gift, which is a book called The Latte Factor. This is a book by David Bach. I actually just read his book, The Automatic Millionaire. Very, very excellent read about building wealth and saving money, and a really short, easy read. So congratulations. We will get that out to you. Now, to address your question, let's see here. It doesn't matter if you pay with cash. Absolutely not. Doesn't matter if you pay with credit card. Absolutely not. So you make a really good point. My wife and I pay a lot of our bills, even our utility bills, with a credit card to build up miles. So when we do this exercise, or when my wife does the exercise, she actually has to not only look at our checking account for the things we write checks for, but she does go into our credit card statements to see exactly what it is that we're writing checks for there. Now, the real quick piece of this is, and I'm going to scroll up to the credit card. So, and I want to talk about that for a second. So if I'm using my credit card to pay things like cable and food and things like that, you don't want to double count those things. You don't want to double count those things. So if you pay off your credit cards every month, I would just leave this part 0. I would itemize all the different things that are paid with charge cards so and then just leave the credit card portion of it 0. You pay it off every month, so we're not really worried about your credit card debt. You're not carrying any. I'd rather see the itemization, because then you can kind of pay attention, like, hey, my dining out got a little out of control last month. I might need to plan a little bit differently, maybe pack some lunches, things like that. So I think that's an excellent question. If you're paying with cash, then it may be a little bit harder to track. Maybe you just keep the receipts. But it is really important to know what's going on as far as your spending. So if you are paying with cash, just keep the receipts and you can count those up. Okay, Jacoba. Okay, good. Bobby's going to send us the address where to send that. Okay, good. So to catch everybody up, we've taken care of the minimum amount owed column. We've taken care of this column. Now we're going to talk about things that we actually paid. And I actually just need to finish this. So we're going to finish this column here. Oops. Sorry about that, guys. We'll finish this column here so we know what we paid. And we've got this 125, and then we've got this last part, this 200. Okay, now, other things that right now we're at about 4,099. So we've got roughly an extra $300. What did we do with that $300? We're going to show you a couple different things. First of all, I'm a big proponent of investing in your 401k. I would prefer if you had at least a month's worth of savings, but when we coach, we go through this budget form with our employees. When we coach them, my team, we go through their budget and everything, and I give them some coaching. I would like to see at least 1 month's minimum as liquid cash. And then you should consider your 401k. Couple reasons why. Number one, you're putting in the money tax-free. That's a huge deal. If your tax bracket's 29%, that means you save 29 cents on every dollar that you put in the 401k. The next reason to put money into 401k is that most employers have a match. Here at Cross Country, we match 50% of the first 6%. So if my employees take 6% out of their paycheck every paycheck, they're going to get an automatic return of 50%. Doesn't matter what happens to the stock market, they're making 50% and they're saving the taxes for another 29% savings. It's a no-brainer. And so what I would suggest to you, and it's covered in the book Automatic Millionaire, also written by David Bach, what I would suggest to you is start small. If you're like, I don't think I can afford it, start with 2%. Once that gets comfortable, raise it to 3%, raise it to 4%. It'll get a little addictive because you'll start seeing the balance go up. By the way, right now the stock market's going down, it's correcting. I wouldn't really sweat that. Let's talk about that real quick. I think the stock market was down about 6% last week. If you put money in and saved 29% in taxes and had a match of 50%, who cares if the market's down 6%? Ultimately, we think the stock market might correct 10 to 15% this year, but that's normal after two strong bull run markets. Now, I had a financial planner invited. We're going to have a financial planner that'll sit on the panel with us that can kind of talk a little bit about this. I don't have a financial planning license. I'm not giving financial advice, just giving some thoughts and assistance to you guys. Ultimately, I'm not selling you investment products anyway. But anyway, let's talk about the 401k. That's enough of my rant about that. For this person, let's say that their 401k was, we had put it in here, $304. Now you're going to need your paycheck stub for this because you're going to see $304. Now this $304, by the way, it's money that you paid into, money that you saved. So this is going to be our first little addition. We're going to put $304 there. And you didn't net the $304. Again, I wanted you guys just to use net deposits. We showed payroll up here at 3,800, but you did make that money. You just didn't see it in your checking account. It got put in another account for you. So that's $304 that was saved. Oh, by the way, if your employer has a 50% match, you made another $152 just on the match. And we'll fix this real quick. So you made another $152 on the match. So you've got $304 that was paid out, $304 that was saved, another $152 across the board. Now, all the bills have been paid, and we have, let's see here, let's see if my math works out for this. Oh, I'm off about $50. 330. Oh, I know I was off $50. Haha. Okay. Last but not least, one of the things I do on this form that I track is giving. I feel that, my wife and I have a budget for giving, and I feel that if you're watching your money, in the religious world, they call it tithing. But if you're giving money to your church, I want to talk about giving in big perspective too. Giving doesn't necessarily mean giving money to your church, doesn't mean writing a check to United Way. It could be, you're helping out a relative. You took care of something, somebody needed something, you took care of something. I don't care if you gave the guy at the end of the ramp $40, and that's all considered giving in my mind. So you help family, you write a check to United Way, you help somebody on the street, it's all giving. So I'm going to put a note in here that this person gave $50. And we do track our giving on this form. I'll show you that in a second. So we had $50 in giving. After we're done, we were left with $280 that we put into our money market, 280. And, whoops, I'm off a little bit. I don't want to be off. Let's go back here real quick. 280, whoops, out. Oh, that's why I'm off, because I shouldn't have added it. 280 here. Now, the purpose of this, like I said, 290. The purpose of this is this key on this form is column 3 and column 5 should match. Everything that went out for the month, everything that came in for the month, it should match. This form, now we were able to, after we paid all our bills, we paid off our charge card and everything, we had an extra $290 that went into our money market. And again, I want to build this out a little bit for you guys. So our money market balance for this particular person, before I jump down off this form, we basically just did your budget for the month. We took care of everything that you guys paid. I'm sorry, we took care of everything which was minimum owed, everything that was paid, everything you brought in, and most importantly, the amount of money that was saved. This is the only budget form I know that will actually help you track the amount of money that you saved in that particular month. And there's a couple other formulas we have built in the form that I think you guys are going to like too. So any questions about that? You know, we are giving away fun and fabulous prizes here. So if you guys have any questions, let me know. I do like the interaction, and it tells me that A, you're paying attention, and B, I haven't lost anybody. So if you guys hit the chat, let me know at least, I'm going to grab some coffee. Let me know at least that you understand how to use the form. Is there anything in here that I need to explain? All right. So, all right, we're going to move on. So to build out the rest of the form, we have the bottom, which I'm going to scroll up so you guys can see. So we know, good deal. Thanks, Brandy. I appreciate that. Got a little feedback. So we know that we have a money market of about $39.75. So that's what's in our money market after we make this deposit. We ended up with $39.75. We do know, however, that our minimum that we would really need to have 3 months in here is $10.9. All good. We were able to deposit another $290. We actually, this is really important. The percentage of our paycheck that we saved was about 16%. Ideally, if you could get to saving 20% of your paycheck, now a lot of it was in 401k, which was automatic, which is cool, but you're able to save a little bit. If you can get to 20% every month, paying yourself is key. If you want to be a millionaire at retirement, paying yourself is key. And that's why this form is really, really helpful. Showed that we saved $792. Guess what? When we do this in February, there's a clean sheet for February. It's going to add that. So it's going to keep showing your year-to-date savings. So it'll give you kind of a running total. And at the end of the year, you can high five yourself for saving whatever it was that you accumulated for the year. Now, we've got a cash net worth here of $39.75. We've got total net worth. But what we forgot is, hey, if we've got a 401k, maybe we've been paying on that for a little while. So I'm going to put in here that there's now a 401k balance of about $1,254. That one keeps shifting on me. Sorry, guys. Maybe we've got $12,000 in our 401k. Now our cash net worth automatically goes up when I add that over here. And we're going to add, maybe we were lucky enough to maybe put about $1,000 in a mutual fund. I'd still prefer the money market to have 3 months, but maybe we decided to invest in the SPY, the Standard & Poor's Index 500. If we invested in the SPY, maybe we put $1,000 in here. By the way, that SPY, if you just invest in that index, it's averaged a 9% return over the last 25 years. Pretty good deal. We don't have any stocks yet, ultimately, because we still want to build up our money market, so we don't have any stocks. As far as equity in our home, I did mention this person had a condominium. We're going to put in here that the condominium has a worth, I think tuck that in here, roughly about $130,000 based on the equity that they're building. They've got about $31,000. Guess what? That automatically transfers over here into their total net worth. There's formulas in here. You don't have to do anything and change the formulas. Automatically calculates the net worth. Now, the one thing that it didn't do is drag the giving down here. So we'll go ahead and manually add the giving. We added the giving. We don't currently own any rental properties. And with that, this form is done. You guys actually have, calculated, in this particular example, this person has a net worth of about $50,000. A lot of it's tied up in equity. That's fine. Got a 401k balance. That's great. We saved some money. If our target was to save 10%, she smashed it, or he smashed it. 16%, awesome. Target really should be 20%. We'll talk about that a little bit more next month when we do our financial wealth program. So if you like this, and I'll open this up for any questions that you guys might have. If you like what we did here today, February 5th, which is a Saturday, we're actually going to do another class from 9 to 10. It's on financial wealth. This is what to do with the money. What we did today is how to track our money. What we're going to do is what you do with the money, from buying a home, why to buy a home, where to save, and things like that. Ideally, we'll have a financial planner on there. We had one scheduled today, and he didn't keep to that commitment with us and scheduled over us, so he's not part of it. I would have loved to defer and share some questions with him and let him get some of his advice in here. We'll have somebody available next week. Then our next month, that is. So that's February 5th. And there's actually a place to register for our financial wealth webinar on February 5th. On February 12th, we're going to be doing another webinar on home buying. We do one a month. This month's was during the week. Next month's in February will be on the weekend. In March, it'll be during the week. In April, will be during the weekend. You kind of get the pattern there. So we're doing a home buyer seminar for anybody who's thinking about home buying, and we're constantly tweaking and updating that. And we've decided to have a little bit more fun with that. So we're going to have a little bit more fun rather than me just ranting on about how great home buying is. Let's see here. And then in March, the financial wealth series, we're going to move to March 19th. As I look in the calendar here, it's going to be credit. We're going to have Jim Drusky on from Illinois Credit Services. Everything that you needed to know about credit. Even if you have excellent credit, I would highly suggest this class to learn a little bit about that. Tony will post those there. This was actually slotted to run for an hour. We covered this budget form in less than 30 minutes. I honestly think the first time you do it, it'll take a while. The second time it's easier. The third time it's even easier. This is a form to help you track what you spend, what you make, and the most important thing is what you save. And the most important thing is paying yourself first. So that's really the key. They talk about it in The Automatic Millionaire. They talk about it I believe they talk about it in The Latte Factor, 2 books by David Bach. There's also another book out there that I would recommend called The Richest Man in Babylon. Also great books about that. Let's see here. Jessica asks, in regards to the money market float, which cell in the budget should look at to know if we are on track with our monthly survival? Cool. Great question. So I mentioned before that this cell, which would be this one right here, I guess we'll try to, I don't know if I can highlight that or not. Anyway, that this form here, actually, the bottom of the monthly survival number, it's going to change every month, but then the form automatically turns into, or the form will automatically show you what 3 months look like. So as you're making your money market deposits over here, that will start catching up to this. Now, what we're going to talk about in the financial wealth program in February is when this number here, this 3975, when that number starts to exceed, what do we do with that money? That's the fun. That's when things start getting fun. What do we do with that money? Can we up our 401k game? And we're going to talk about how much of a difference that could make and how much money you could save in the 401k. Do we start putting together a dream account? Do we start investing in stocks and things of that nature? That's some of the stuff. Also, what DTI, debt to income ratio, should I stay under to maximize my savings potential? It's a really good question. When we qualify people, lenders have a standard. And by the way, Jessica, I appreciate your questioning. So we are also sending you a Latte Factor book. So thank you very much for asking questions and being interactive with us. Okay, so what debt to income ratio should you stay under to maximize savings potential? You know, this form, we've pretty much spent all the money that you've made. It's just a matter of what you're spending it on. From a lending perspective, we have certain debt to income ratios that we look at. I'm not super comfortable sometimes using those to qualify people, because I think like a lender or an underwriter is going to calculate the things they see on a credit report. So student loan payments, credit card payments, car payments, those are the things that they're factoring in to qualifying you. What they don't know is if you have medical expenses, daycare, other things like that that don't come into consideration when we're qualifying you. That's why I think everybody's better off having their own personal budget. And when people come to us for a mortgage, a lot of times if they don't have any idea what purchase price range they're going to be, we ask them, what are they comfortable writing a check for every month? That to me is the most important thing, because regardless, and this is the problem that happened 12, 13 years ago with the financial crisis, the housing bubble, whatever you want to call it, there were crazy programs out there that told people they can qualify for stuff that wasn't within their budget. And people went into those mortgages thinking, well, if the bank thinks I'm good, I must be good. I think that's just very, very dangerous, careless, and negligent on our part. We need to sit down with you and figure out, what are you going to be comfortable making payments on? So this form is not really conducive to debt to income ratio because it takes everything into account. Debt to income ratio is really more of something that comes up when we're qualifying you on a mortgage. I hope that helped. All right. Is there a way you would recommend putting in a budget for a vacation, or you're putting aside each month and then pull it out at the end of the year? Sure. Thanks, Hannah. That was a great question as well. And I have one more book available, so we appreciate you asking the question. You also get the latte factor. Okay. For putting some money aside for a vacation, you've got this 1 month that you've got saved up for reserves. I would say certainly start when you go through the budget, instead of adding to the money market, add it to what we call a dream account. It'll just be a separate account that you add money to. What would be really cool is if you had your bank set up an automatic deduction out of your checking let's say you get paid on the 15th and the 30th. Some banks will allow you to set something up where you can actually automatically pull out $100 or $200 a couple days after your paycheck clears. You get paid on the 15th and 30th. Cool. On the 5th and the 20th, then pull out $200, drive that into savings. Keep in mind the money's coming out, but you can automatically make those types of deductions in there. So, and eventually when we get our money market float up to 3 months, if you hit it a little bit for vacation, just remember you got to add back to it. So we're big fans of paying for things not with credit cards, but paying for things with cash, as far as that's concerned, and savings, and then putting it back ultimately. My kids have a lot of sports. How is that factored in? Cool. So again, if you're paying for sports and you're going to basically add a line item in here for whatever it is that you're paying for sports, and if you regularly have your children in sports, then you're probably on a monthly basis, whether it's travel expenses, equipment, registration for the clubs or the leagues or whatever they're in, it's probably going to be a constant thing. So I would include that in here, and I'd create a different line item for sporting, or even put it in here as kids, sporting, and then just add that right in here. So it's just going to be part of your expenses. So, all right, there's that. Now, one thing I've commented about, and nobody really asked the question, but we talk about credit cards, what's more important, paying off a big credit card balance or savings? I would tell you both. So how do you do both? So in a situation where you've only got, let's say, for example, let's say this little guy right here was 2442, and we knew this is 40, so we're going to get that out of here. So we've got, what did we do? We got roughly about $402. We saved $290. I'm going to grab a calculator really quick. 290 plus 402. We should have about 692 left if I zero this out. Yeah, exactly. So we have 692 left. So when we do all this, ideally you want to get to a point where you can actually pay your bills once a month. That's kind of a tough thing to do. My wife and I have been doing that because we were paid by a mortgage company just on once a month on the 15th. So we used to pay our mortgage that was due in the 1st of February, January 15th. If you pay the mortgage January 15th, it's okay if it's due on the 1st of February. So if it's possible, you want to try to pay all your bills at the same time so you have a better picture. But in the example that I have, you got $2,400 in credit cards. We know after making the minimum payment and not putting any money in our money market account that we'd have about $692 available. I would typically just divide that by 2. I'm going to end up sending $386 to the credit card, and I'm going to deposit $346 to the savings, and 346. And let's see if that worked. My numbers are going to be a touch off, aren't they? Because of that on the savings. Anyway, what did I do wrong on that one? Ended up 346. Let's figure out what I took out of there. 346. Oh, actually, that doesn't go there because that was not savings. Oh, and that doesn't go there. Yeah, that doesn't go there because it wasn't savings. We're good. Sorry about that, guys. All right. So I would just take the excess of whatever I had, divide it between the credit cards and the savings. You always want to be savings. You always want to be paying down credit. I think if you focus only on paying off the credit card debt, it's a trap because if something happens, you don't have any cash to hit it and you got to go back to the credit card. If you take the excess money, pay a little credit card, save, pay a little credit card, save, pay a little credit card, save, the money that new set of tires that you might need should come out of cash, not adding to the credit card debt. So eventually this 2,400 goes away and you can drive more of that into savings. So that was one point that I want to cover. So everybody can do savings. I just think that it's smart to save and pay down credit at the same time. Any other questions we've got? It's about 9:40 and we covered a lot of this really quickly. Register for the credit webinar. We've got that in there. Brandy, thank you very much. I think you if you didn't win a book, we'll get you a book. So I'll make sure Toni takes care of that. And thank you guys for attending. This will be recorded. Yeah, so Toni's got a link on YouTube where this will show up. And Bobby, I appreciate that. Copy. It might not be in. Oh, okay. So this, you should get this, Bobby, into an Excel spreadsheet, which you can kind of add your numbers. The only thing I would be careful on the Excel spreadsheet is try not to change any of the formulas. There's some really cool formula stuff in here. Like that's a formula. You never want to enter this box here. You never want to change this because the formula is already embedded. Unless you really know something about Excel. I do not. I'm not good at Excel. Don't change these formulas because these formulas add up this column automatically. So don't mess with the formula boxes, but you should be able to use any of the other ones. So, all right, cool. This will be available on YouTube. Guys, thank you very much for listening. We appreciate giving the books away. We hope that one day you'll be like this guy right here and you'll be able to help your family out and not be taking a risk with your finances. Again, Rich Kimball with Cross Country Mortgage and the Kimball team. There's something that we can do for you on the mortgage side. We'd love to help you there too. Otherwise, if you get a chance, give us a great review online. Thank you guys for listening. We appreciate you all, and we will talk to you soon next month. Let's hope. Close out of here.